from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
Caroline Hyde in New York, in for Emily Chan. This is Bloomberg Technology. In the next half hour, we will take a deep dive into the President Joe Biden's pick for Jerome Powell and Lael Brainard, of course, as chair and vice chair of the Federal Reserve. Will this decision help the president avoid a contentious Senate confirmation battle heading into an all-important midterm election year, in which inflation looms as a major issue? Let's take a quick look at the market reaction to those announcements, because, in fact, big tech took the hit. We maybe see a more hawkish tone as we see Fed Chair Powell remain in place. Many had felt Lael Brainard would, to some extent, be more of a dovish voice. Growth stocks, therefore, take the hit, but the banks, they like it, up 1.8%. Still no news on what sort of bank supervision, who will head that part of the Federal Reserve. Remember, still 3 more seats to fill, but the KBW Bank Index up 1.8%, largely because we didn't see yields push so much higher. That, as we expect, perhaps, well, a rate hike as soon as June 2022. Gold futures, they fall down 2.4% as inflation could be tamed somewhat quicker than the market had previously anticipated. And Bitcoin currently at 56,000, off of its highs, not proving much of an inflation hedge in the eye of the investor, more of a risk asset. It was down on the day. S&P 500 falls from its record high, down 0.3% as we see some of the key tech names under pressure. And we see the 2-year yield, key moves there as we see an auction that's had some soft demand overall. The Bloomberg Dollar Index continuing to rally, up some 0.4%. Emerging markets feels the brunt of that. Meanwhile, of course, I do indeed want to welcome our Bloomberg television and radio audiences as we head to Washington, where we're joined by Bloomberg Sound On anchor Joe Matthew, always great to have him, and Democratic Senator Mark Warner to chew on the news that we got today, of course. Finally, the announcement the Federal Reserve will remain helmed by Fed Chair Powell, but coming in as Vice Chair Lael Brainard. We're still waiting to hear who will be nominated for the 3 remaining seats over at the Federal Reserve. But, Senator, first and foremost, your reaction to the picks.
Well, I think it was great news. I think in Jay Powell, we not only have continuity, we have someone that the markets are comfortable with. We have someone that both Democrats and Republicans alike respect. I think he will be overwhelmingly reconfirmed as chair. And in Lael Brainard, as one of the vice chairs, again, we've got a known quantity, very, very strong credentials on the Democratic side. I think it's a great 1-2 punch.
Senator, I wonder, as someone who will be among the first to vote on these picks through your role on the Finance Committee, if you agree with the administration when it comes to its baseline argument on inflation, is it transitory or will prices continue to rise through next year?
Well, I think we've all been a bit surprised at how big the inflation bump has been, although we're obviously in uncharted territory. We've never gone through a complete economic shutdown and how long it's taking to get the economy reopened. I think we have seen certain blips that have been transitory. I point to lumber earlier in the year, how high the costs went up and they've started to come down. I'm starting to hear some better things in terms of shipping, and hopefully that will come down. But I do hope my advice to the Fed chair will be that I hope we could see a little bit of tapering and maybe that moving a little bit faster than earlier in terms of the Fed's acquisition of expanding its balance sheet. But again, this is uncharted territory, so I generally agree it's transitory, but I also tend to believe that it could be, for the short term, at least all of the next 60, 90 days, getting us through the holiday season, it could get a little bit worse before it gets better.
Senator Warner, of course, your Democratic colleague, Elizabeth Warren, was also perhaps less jubilant about the continuity coming from Jay Powell. Her worry has, of course, been the oversight of Wall Street. Lael Brainard, many felt, would perhaps be more tough in that respect, but we're still waiting to fill 3 other seats at the Federal Reserve, most notably the supervisory role when it comes to the banks. What are you expecting from the role of the Federal Reserve there, or indeed the other administration appointees who have yet to be confirmed?
Well, I'm anxious for the administration to move a bit quicker on its other nominees, particularly the regulatory supervision. I appreciate, while I've not always agreed with Randy Quarles, I did appreciate the fact that he's been willing to kind of move on to give the president more flexibility. I'm not sure I agree with all my colleagues that we've seen this any kind of dramatic relaxation, particularly on the largest institutions. I think the basic framework we put forward in Dodd-Frank has stood its test of time. Obviously, we've gone through a pandemic and a complete economic shutdown. And while many parts of the economy suffered, the financial sector did not take the kind of hits that if we hadn't put the kind of capital reserves in place out of Dodd-Frank. So I would give the sector, while there may be individual areas I would have done differently, but I think I would have given it a very passing grade. And I think, candidly, a lot of that was due to the reforms after the last financial crisis.
Senator Warner, President Biden today, in rolling out his pick, said that Chair Powell, assuming that he will be renominated or reconfirmed, I should say, will make climate change an issue, will acknowledge and try to mitigate the impact of climate change, knowing that a dozen Republican senators sent a letter to Chair Powell last summer, essentially criticizing the Fed for changing its tone and mission here. Do you believe that that would be the case? What would that mean for the mission of the central bank?
Well, I don't know any sophisticated investor that doesn't think taking into consideration some of the hidden costs that are being brought about by climate change. We need to have those costs factored into the system. We need to have more visibility. We just went through a year where a third of America couldn't go outside during the summer because of forest fires. Another third in the South were constantly besieged by hurricanes. And we had more deaths, frankly, in flooding in New York, in basements than we even had from the hurricanes. So the notion that we could ignore climate, again, I don't know any sophisticated investor that doesn't think this should be high, I believe, not only on the Fed, but I think on all central banks' agenda.
It's interesting, of course. There's plenty of worry when it comes to the energy crisis. That dovetails nicely into the consideration of the climate as well. We have been seeing gas prices spike significantly over in Europe, much of that coming as we see tensions rise between Russia and Europe, whether it comes to Nord Stream 2, also when we see, of course, a buildup of troops, we understand, being reported on the border of the Ukraine. That's affecting the corn market as well today. From your perspective, Senator, is enough being done in the relationship, the geopolitical relationship between the US and Russia at this moment?
Well, I also happen to be the chairman of the Intelligence Committee. And the one thing we are sure of is that Vladimir Putin likes to stir the pot. And his overarching goal is not only vis-a-vis America, but vis-a-vis NATO, to try to keep us off balance. Obviously, he has a historic view about Ukraine that the vast majority of Ukrainians don't share. I think the one thing that unites Ukrainians, whether they are in the West or even in the Donbass and some of the eastern regions, is when you see Putin and his forces start to mass. I was in the UK just a week ago, and this is clearly top of mind amongst our British friends. My hope would be that the balance of NATO would continue to send that message to Putin about adventure tactics around Ukraine would be destabilizing for the whole region. My hope as well that other nations, the last thing the world needs is Putin messing in Ukraine at this moment as the overall global economy tries to come back from COVID.
Senator Mark Warner, we always wish we had more time with you. Thank you so much for your time. And Bloomberg's Joe Matthew is sound on. You're going to be sticking with us, I'm pleased to say, because we'll have so much more after this break. Stay tuned. We're talking more politics, more power. This is Bloomberg. Welcome back to Bloomberg Technology. Let's get a quick check of where the markets were today. Of course, once again, on the news of the renomination of Jay Powell for his second term as Fed chair. the NASDAQ, it was growth stocks that took the hit, as many felt that, well, perhaps we'll have a more hawkish tone coming from Fed Chair Powell if he remains in place. Lael Brainard, of course, takes the vice chair position, but many had felt that she'd taken the leadership role. She could have been perhaps a little bit more dovish. So we start to bet against inflation a little bit more and expect a rate rise as soon as June 2022. The market's certainly factoring that in. That means, while yields back up, they rise. KBW Bank Index does well on the back of that. Banks, of course, benefit when we start to see a rise up in interest rates, up 1.8%, your key outperformer on the day in terms of sectors. Your underperformer in terms of commodities, gold, off by more than 2.75%. This is we start to see, well, perhaps less need for an inflation hedge. Bitcoin, is it your inflation hedge? Is it your risk asset? It seems to be a risk asset at the moment. 56,000 is where we trade, dragged lower as we see that risk-off sentiment in terms of growth. Let's flip up the boards and have a little look at what happened in terms of the S&P 500 falling off of its record high. It was higher for most of the trading day, but you saw suddenly risk aversion come into the market just towards the close. Remember, this is a shortened week, perhaps some volatility therein, as we see people start to mark up their books and take a well-earned break. The yield, though, pushed higher in the 2-year and the 5-year, had all important auctions. And selling, of course, new supply comes to the market. Yields push higher to the tune of 7 or 8 basis points on your 2-year. But that also factors in the fact that we might see rate increases come faster than the market had anticipated. That, of course, moves the shorter end of the curve that much quicker. But actually, we saw yields rise across the entire curve. And indeed, those all-important break-even rates, as they're known, signaling of where you see inflation rates, they pushed back. And we saw the real yield, really the key area of movement. Overall, it feels as though this is a market that feels that President Biden's reappointment of Jerome Powell to the Fed chair is less dovish, but not a hit on growth, pricing in slower inflation, but indeed still faster growth. This is a signal of confidence, a signal in the confidence of the US dollar at 0.4%. Emerging markets therefore feel the pain. We saw emerging markets sinking some 0.6%. But remember, there's idiosyncratic news at play as well. The Russian ruble getting hit in particular as we worry about some of these relations between Russia and Ukraine. Meanwhile, we, of course, want to be going back to our conversation on the Federal Reserve, what it means for regulation, the Fed decision, and indeed, we return to D.C., where my colleague and host of Sound On, Joe Matthew, is with us, standing by for all of his radio listeners. And we want to return to the White House, where we're joined by the president's top economic advisor, Brian Deese. He's the White House Director of the National Economic Council. Wonderful to have you with us, Brian. And first and foremost, it took a while to get these announcements, but what do you make of the reaction? The market seems to think that we've got a slightly more hawkish bent with Fed Chair Powell at the helm, and certainly the rates being factored into the market, that we could see our first hike as soon as June.
Well, the president's focus in nominating both Jay Powell and Lael Brainard today was to focus on people with experience, expertise, and independent judgment. And we feel very good that we found two individuals with unmatched experience, sound judgment, crisis tested coming through this crisis. And both of them together spent a lot of time working on this new monetary policy framework, a commitment to a strong, robust recovery that brings everybody along. So we feel very good about these two individuals. We feel good about the reaction to them, and we hope that we will get them confirmed quickly here and in place.
Brian, just to add on to Caroline's question here, the timing of this announcement, we've been talking about this, of course, for weeks. I wonder what took so long to make what apparently was such a non-controversial announcement with Powell and Brainard. Why wait till today?
Well, the president's deliberate about these issues. The stakes on these decisions are high. And by making the announcement now, what we're signaling is two very strong individuals who we think will now have plenty of time to be considered by the Senate and confirmed before the end of these terms. So yes. I think it's a appropriate moment to get this rolling, and I think also will be good for reinforcing something the president reinforced today, which is the independence and the credibility of the Fed. It's incredibly important that we reinforce the independence of this vital institution. I think you see the president prioritizing that in his announcements today, and the timing helps to reinforce that these folks can and will be confirmed in time before their terms expire.
Senator Elizabeth Warren says she will not vote for Jay Powell to continue in this role as chair. Not a big surprise there. I wonder if when the president met with Senator Warren, he asked for her support, or is the White House counting on some Republicans to make up for progressive votes either in the banking committee or on the floor?
Well, Senator Warren's has enormous expertise in this area and is a trusted partner of this White House and of the president. And we're certainly grateful to have her support for Lael Brainard as vice chair. and also understand that Chairman Powell will have broad support in the Senate. We've seen that over the course of the day today from Republicans and Democrats, the chair of the relevant committee in the Senate, as well as the Congressional Progressive Caucus. And so I think what you're going to see here is support from Republicans and Democrats to reinforce the importance of the independence of the Federal Reserve. So we're confident that both Jay Powell and Lael Brainard will be confirmed, and also that we're going to work with supporters and detractors alike, particularly as we look to this next set of nominees that the president has to make. Importantly, the vice chair for supervision, who will oversee bank regulatory issues.
Talk to us about overseeing bank issues as well and regulation. How aggressive will that person be from your perspective? Because that's what a lot of the progressives are calling for.
Well, I don't want to get ahead of the president's choice, but what you did hear him say today is that he's focused on identifying somebody who has the credentials, the expertise, and the toughness to do that job. It's an incredibly important job at the Fed, and I think that in his conversations with both Jay Powell and Lael Brainard, they are looking forward to having somebody in that role and will defer to the expertise of that person. And so it will be a very important pick and an important complement, including the additional 2 governors spots beyond that the president will have an opportunity to nominate. So all 3 of those individuals will help to fill out the slate at the Fed, and that's something the president, again, is going to take very seriously. We'll focus on getting done here in the next couple of weeks.
Brian, tell us more about those remaining seats and those remaining announcements by the president, who today said they would bring new perspectives and different voices to the central bank. How would they change the mission of the Fed? What did he mean by that?
Well, I don't think they changed the core mission at all. And you heard the president reinforce today the importance of the Fed's independence in pursuing the dual mandate around maximum employment and price stability. What they would bring is diversity of perspective and thought that's so necessary to actually make those decisions in a thoughtful and independent way. The president is committed to the idea that a body that makes such vital decisions for the American economy should reflect America and should reflect the diversity of life experiences that this economy reflects. And so I think you'll see people who have real expertise in the field, but also bring perspectives that we haven't had on the Fed board historically, and that will really add to the decision-making process.
So assuming you've got a short list there, Brian, do you expect announcements by the end of the year?
That's certainly our focus. We're going to try to get it done here in the next couple of weeks.
And as you try to get those names dotted and T's crossed, I'm interested in, when you talk about diversity at the Federal Reserve level, it's important to have those sorts of viewpoints when we see inequality growing within the economy, when we have such an economy that is roaring but not bringing absolutely everyone with it. We still saw in the previous labor data the fact that women of color in particular are being left behind, the fact that we're still not seeing participation rate at where you want it when it comes to women and indeed black men. How do you hope that the Federal Reserve might be able to ease some of that growing inequality?
Well, one of the things that the president was most impressed by about both Chairman Powell and Lael Brainard's service over the last couple of years has been their focus on developing this new monetary policy framework that really puts at the center maximum employment broadly defined and looks at driving an economic recovery that actually brings along parts of the labor market and parts of our society that have previously not benefited from economic growth and economic opportunity. And so that's a framework that is new and important, and one that I think both Chair Powell and Lael Brainard will be committed to pursuing, even as we go into uncertain periods and need to deal, obviously, with the threat of inflation. So that's going to be important on the monetary policy side. On the fiscal policy side, that is a core focus of our agenda, our economic agenda. It's something that the infrastructure bill will help to support, and the Build Back Better agenda, by investing, for example, in lowering the cost of child care and elder care, would be a key way to help more women, particularly women of color, get back into the workforce. We've seen this pandemic create really unfair disadvantages for low-income parents who have to make the choice between stepping out of the workforce to care for a child or remaining there. We could solve that issue, get more people back to work in a more equitable way by some of the investments in that package.
Brian, how has your own view on inflation evolved these past weeks with some of the data that we have seen? It's become a daily conversation, a full-time job almost for this West Wing. Do you see prices continuing to rise until the Fed can knock them lower with interest rate hikes?
Well, the prices are high now, no question, and that is affecting American consumers. At the same time, we are looking at the actions we can take as an administration to try to address those. I think a lot of the drivers behind that is that we still have COVID globally. It's affecting supply chains. It's affecting the supply-demand balances. We certainly expect that to ease across time. But, for example, tackling something like the supply chain challenges at our ports allows us to really make concrete progress. A couple of weeks ago, the president brought stakeholders together to get our ports on the West Coast to go 24/7. In the last couple of weeks, we've seen the dwell time, the amount of time that a container sits at port, fall by a third. Shipping costs globally fallen by about a quarter over the last couple of weeks. So we're seeing some concrete progress there. On the issue of gas prices, we've been very focused. You can anticipate the president's going to talk more about that over the coming days. So we're going to do what we can to try to address these issues head on, while the Fed, we expect, will use its tools and make those judgments independently.
White House Director of the National Economic Council, Brian Deese, out in the cold for us. We thank you very much. So meanwhile, we thank also Joe Matthew for sticking with us. Much more as we return. Stay with us. This is Bloomberg. Activision Blizzard CEO Bobby Kotick is not ruling out the possibility for his resignation if he's unable to quickly fix cultural problems. That's according to a report from Dow Jones. Now, this comment comes after a Wall Street Journal article last week alleged he was aware of allegations of sexual harassment and assault against female employees, but didn't report them to the board of directors. Calls for his resignation have been piling on ever since. Meanwhile, coming up, El Salvador intends to issue the world's first sovereign Bitcoin bonds and build a Bitcoin city, which will be powered by a nearby volcano. Can't make it up. We'll be live from the Latin American country next to ask, well, why 6.5% on that coupon? Shouldn't they be paying more? Fascinating. This is Bloomberg.
This is a good team at the Fed.
This is sort of the dream team.
I think this is a don't rock the boat move.
There certainly is not going to be any conflict on monetary policy.
This is the central case that the markets expected.
To not reappoint Powell would have been quite negative for the markets.
The announcement today is going to give the market more confidence to move ahead with the pricing of rate hikes for next year.
It's not my expectation that we'll get a faster taper.
We still have the Fed on wait and see.
They stick with the current pace and then hike once you get to the end of that.
We're at a point in the economy where stability is really important.
Continuity.
Total continuity. Continuity is a very good thing to have at the central bank, and that's what we're going to have.
Just a little bit of reaction from just some of our guests we've spoken to today on Bloomberg TV about President Biden's nomination of Jerome Powell to head the Federal Reserve for a second term. Let's discuss how this impacts, well, the world that we're thinking of, tech, cryptocurrencies in particular, and the nomination of Lael Brainard as vice chair to that end. I'm joined by Bloomberg's Ed Ludlow in London. And what do you make of the picks in that respect?
Well, you set me up well because they were talking about there'll be no conflict on the monetary policy side. So I thought, why don't we find some conflict? That's always a good thing to do. You know, when the White House announced this, Caroline, there was, I don't know what you'd call it, a relief rally across risk assets, right? And if you come with me into my Bloomberg terminal, cryptocurrencies was no different. We saw Bitcoin and other cryptocurrencies, which had been pretty heavily lower on Monday, then pair those losses. But as you see, they started to trickle down afterwards. This is the key differentiator, right, between nominee Powell and Dr. Lael Brainard, that she has talked about how the Fed should be more active in its research around cryptocurrencies. She's backed the idea of a Fed digital currency, a digital dollar, essentially, whereas Chairman Powell has kind of resisted the urge to go into that territory. Although we also expect, sort of as vice chair, her to be more active on the regulatory side of things, right? That is the remit of the vice chair as opposed to being solely focused on monetary policy. And she has sounded a warning on a particular section of the cryptocurrency market, stable coins. If you bring up the quote, this is what she's had to say during a speech on May 24th. And essentially, she's warning about the risks, right, for the monetary system. There is a risk that the widespread use of private money, stablecoin, for consumer payments could fragment part of the US payment system. A stablecoin, of course, is one that has a fixed price, usually pegged as a value of $1. It's backed by real assets. But it will be interesting to see what she does here. There was some other news in the world of Bitcoin as well on Monday that I just can't resist the urge. Bring up the pictures. I want to show you these. This is an astonishing story. Footballer Odell Beckham Jr., who's joined the Rams, is going to take his new salary, quote unquote, in Bitcoin. OK, so this is a lot of money. And he's also pledged to give $1 million worth of Bitcoin to fans via a tweet from his Twitter account. But it's interesting. You wonder how much of this is a marketing exercise. But if somebody comes to you, Caroline, and says, hey, how about taking a salary in Bitcoin? Do you have any visibility on what you're going to earn this year, next year, future earnings? Imagine a sports contract like that. I just thought that was astonishing. And it would be nice to mention it on a high.
Yeah, and indeed, we got the leader of New York, the mayor of New York, wanting to take his first few paychecks in Bitcoin as well. They're doing it in Miami. Quite the flavour du jour, Ed Ludlow. We thank you. And let's stick on the world of cryptocurrencies and breaking new boundaries. El Salvador, of course, intends to issue the world's first sovereign Bitcoin bonds and build Bitcoin City, which will be free of income, property and capital gains taxes. The president there, Bukele, is announced in the beach town of Mizata to a crowd of cheering Bitcoin enthusiasts. And one man who really knows the ins and outs of this, because he's helping, well, facilitate the deal, Samson Mao, Blockstream CSO. Samson, coming live from us from a volcano, because they're called volcano bonds to a certain extent, because it's going to be financing this Bitcoin city that's surrounding this area of a volcano. And I'm wondering why any institutional bond investor would buy this.
Well, why wouldn't they?
Because it's got a 6.5% yield, and your yield on your current bonds of El Salvador that come due in 10 years is 13%.
Yes, but this bond has a Bitcoin component, and that is why it is called a Bitcoin bond. So when El Salvador is raising $1 billion in this first bond issuance, 500 million will be used to acquire Bitcoin, and then 500 million will go towards energy and mining infrastructure. So there is this war chest of Bitcoin backing this bond. And that dividend or that coupon actually increases after the 5th year. So for the first 5 years, it will be a 6.5% coupon, but then it accelerates to what I call a Bitcoin dividend, or a special dividend that is basically the Bitcoin being sold off, the $500 million worth of Bitcoin being sold off gradually, quarter by quarter.
Yeah.
So the El Salvador government will share that with the bondholders.
Why wouldn't, if an institutional bond investor was allowed to buy into this, so had the ability within the rules of the fund they invest to have exposure to crypto, why wouldn't they just buy Bitcoin straight up rather than have a 50% take?
Well, they could buy Bitcoin straight up, but usually the mandates or charters don't allow them to hold cryptocurrencies like Bitcoin.
But they'd be allowed to hold these bonds, you think, in the mandates?
Why not? It's just a bond.
But it's not just a bond, because it's related to Bitcoin. And as you say, 50% of it over a 5-year time frame, if indeed you manage to pay that back, would be able to be given based upon Bitcoin now. So do you think those mandates would allow them to buy in?
Well, that's really for them to figure out. But we're trying to structure this in a way that they can present it to their boards, their directors as a normal bond, because it is a normal bond that just happens to have a large chunk of Bitcoin behind it. But even if they don't buy it, I don't really see a problem. There is Bitcoin's market cap is over $1 trillion. There's about $145 billion worth of stablecoins, and this is just from the Bitcoin industry, traders, whales, and this money will just pour in. I was in Turkey talking to my friend, the CEO of BTC Turk, Oscar, and I told him about this plan. I told him I'm going to El Salvador next, and I told him about the bonds. And in 2 seconds, he said, I'm in for $1 million. And then I said, are you sure you don't want to think about it? Do you want to see the specs? Do you want to read more? And he's like, no, this is for the people of El Salvador. So the money will come in. There's another whale that I talked to just before coming on your show, and he said, I'll take 20 million of it. So,
but Samson, is it not wrong to think that people shouldn't do their due diligence first?
Yeah, they should do their due diligence, but there is an important part here, which is helping El Salvador and fixing the money supply. And I think that's more important than the exact specifications on a bond.
So you think, even without institutional bond investors, if they are perhaps driven away by the fact that the yield is so low relative to existing bonds, or indeed they can't have exposure to Bitcoin, do you think it will be, who will be the actual investor? It will be more crypto-focused enthusiasts, and they'll be good for $1 billion?
I think there's more money than $1 billion that's going to flood into this bond. The institutional investors, they can come in, like they can do their due diligence. 6.5% is in line with most bonds around the world. And there is that special Bitcoin dividend. So they can run the calculations. Like if at the end of 10 years, Bitcoin is $1 million, we've done a calculation where Bitcoin's appreciating 35% year over year, then the yield that year will be about 90% plus the 6.5% coupon. But if it goes higher, we had another conservative model which put it at 140% APY plus the 6.5% coupon. Then it's a pretty attractive bond by any measure.
Definitely versus bonds versus crypto, which, I mean, Bitcoin is up on an annualized basis 240%. So you might be therefore losing out to the opportunity cost of just getting into Bitcoin-related exposure rather than going into this bond. But Samson, I'm interested that you're in Turkey, you're in El Salvador. Are there other countries, other areas, municipalities looking at this with, dare I say it, perhaps political risks that some just don't always willingly swallow?
Well, there's risk in everything. Even buying Bitcoin comes with risk. And it's really just up to people to make their own decisions and take their own analysis on it, DYOR. I think there's a lot of interest. We've already had some institutional investors reach out to Blockstream, and they're very, very interested in this offering. And I guess that means that their mandate would allow them to buy this bond.
You talk about accelerate hyper-Bitcoinization and bring a new financial system built on top of Bitcoin. Can you just dissect what that means?
Well, hyper-Bitcoinization just means you don't need to go back to fiat currencies. You can just buy Bitcoin and stay in Bitcoin and spend Bitcoin. And El Salvador is a key part of that, right? Bitcoin is legal tender here, so you can buy Puvusa with a Lightning Network, and you can just spend Bitcoin freely. And Bitcoin City is going to be a very attractive place, I believe, for a lot of Bitcoiners.
Meanwhile, though, of course, relations with the US and El Salvador, from a government perspective, seem to be unraveling. They're heading yet a further low at the moment. There are, of course, worries of relationships between El Salvador and the IMF. Does any of that matter to some of the investors that you're talking to?
No. I don't think a lot of these organizations like the IMF or World Bank are really relevant in a world based on Bitcoin. They're only relevant because they can print money. They can make the SDR, they can make money out of thin air. You can't do that on a Bitcoin standard. It really takes us back to, what money should be, which is just money, not a surveillance mechanism and not a tool to, enforce your beliefs and economic policies on another nation.
Samson Mao, it's a beautiful shot. Don't think we've ever really had someone coming from a volcano before and talking us through some of the risks and the rewards potentially coming from these bonds. But we fervently say, do your due diligence. Samson Mao, Blockstream CSO. Speak to you when some of the announcements come through on how the bond sale went. Meanwhile, coming up, we'll look at how one company is trying to make space exploration more affordable. Sierra Space, the company that has partnered with Blue Origin, just received new capital to move forward with its dream of a space station of its own. More on that next. And as we head to break, let's take a look at Zoom Video. The video conferencing company gave fourth quarter revenue guidance that beat analyst estimates. There have been concerns about the prospect of decelerating growth as the economy reopens from the pandemic. But as you see, after hours, down by 5.6%. This is Bloomberg. Amazon co-founder Jeff Bezos is giving $100 million to the Obama Foundation. It's the largest single gift ever to former President Obama's philanthropic organization. And the gift is in honor of the late Congressman John Lewis. The foundation says it will be used to help expand the scope of programming that reaches emerging leaders in the US and around the world. Meanwhile, let's turn our heads to the stars now. Of course, an area Jeff Bezos now looks in particular. Sierra Space, valued at $4.5 billion. The space subsidiary of Sierra Nevada Corporation just raised $1.4 billion in a Series A round that will help the space company move forward with its vision of setting up affordable space transportation habitation. This project, called Orbital Reef, is a joint product with, indeed, Jeff Bezos' Blue Origin. Here to talk about all of this, Sierra Space President Janet Kavandi. It is great to have some time with you, Janet. And what the largest aerospace and defense capital raise globally in 2021. I'm interested in what you hope to accelerate through the money. Oh, I think we have some technical issues. You're muted. Give 1 second.
Okay.
There you are.
Can you hear me now?
Yeah.
Sorry about that. Yeah, the first and foremost that we are trying to accelerate is our Dream Chaser space plane. So this is, happen to have a little model of that right here. So it looks like a miniature version of the space shuttle. It is due to launch at the end of next year from the Kennedy Space Center. So we are trying to keep that on track for that launch window that would begin at the end of November next year and end at the end of February 23. So we really want to hit that. In addition, we're trying to accelerate our ability to build space destinations, which include an inflatable habitat that would go to a low Earth orbit and be available for the time when the International Space Station reaches the end of its normal life. So we want to have that checked out and operational before the end of the life of the International Space Station. And that is what we are in partnership with Blue Origin for.
I mean, this is real validation to the credibility of business, because I look at the investors, General Atlantic, Coatue, More Strategic Ventures, but also BlackRock Private Equity as well. So household names, what do they see in your business? What are the vision of space that you're painting to them? Is it somewhere that we go and move and live, or is it more learning and mining? What is it that you paint?
A little bit of everything you just said. So we want to enable more and more businesses to go to the area of low Earth orbit, which is about 200 to 250 miles up. One of the main advantages that we provide in that altitude is the ability to do things in microgravities, where you feel the lack of gravity, even though you're in free fall the entire time. You're able to manufacture materials with fewer defects. You're able to do medical research much better in microgravity than we can here on the Earth. We can print 3D tissues that can potentially grow into organs, so that we could print organs for people that so that they wouldn't have to wait for donors to donate their organs to people when they are most in need. There's just a limitless number of opportunities up there, and we probably don't know the one that is going to be the big result of all this work. We probably don't even know what that is yet, because most of our research ends up in things that we don't even anticipate. Mm-hmm. And those are sometimes the biggest producers of monetary and beneficial gain all the way around.
Janet, of course, you worked with NASA. You're an astronaut. What was it? 33 days in space. I understand you're in the Astronaut Hall of Fame. Absolutely amazing. Talk to us a little bit about some of the other companies that we might know that are already working in partnership with you as well. We mentioned Blue Origin, but I understand you're working with Boeing and the like.
We're working with Boeing as well, and I did work at Boeing in a former life before I ever went to NASA in the aerospace field. We are also working with Redwire. We're working with several other companies that will enable us to put the whole project together. So we want everything from launch capability, which Blue Origin can provide with the New Glenn rocket. We provide the Dream Chaser space plane, which can take both people and cargo to the space station, our new space station, and return cargo and crew. We can return cargo back to a runway and crew back to a runway, so that they won't be coming down in the ocean or on land under parachutes. They will land like the space shuttle used to land, which we think is a real advantage. And then we have people who have experience with working a space station, like Boeing, who is currently operating the ISS, as well as people who have done 3D printing and other technologies in space.
Janet Kavandi, great to have some time with you, Sierra Space President. We really thank you for your time. Meanwhile, coming up, the co-founder of Deliver, which is now valued at $2 billion, joins me next to talk about how the e-commerce fulfillment startup is making shipping even faster. This is Bloomberg. So Walmart is taking another step towards making aerial deliveries routine. It's joining up with DroneUp to drop off items ranging from cans of tuna to children's thermometers. For now, deliveries are limited to a little more than a mile from a base outside a Walmart store in Farmington, Arkansas. In the coming months, though, the service will be expanded to several more stores in the state. Faster delivery, of course, is now the norm in the United States, and companies are doing everything they can to make sure things are delivered not only on time, but in at least a day or two. Deliver is an e-commerce fulfillment startup just announced another $250 million in funding, valuing the company at about $2 billion. Their clients include merchants on platforms like Walmart, Amazon, Shopify, Target, eBay. Joining me now is the co-founder of Deliver, Michael Krakaris. Michael, what are you going to be using the money for?
Yeah, I mean, as with everything with Deliver, it comes down to our merchants. And so we're going to be investing in the things that make our merchants successful. And it comes down to a few core pillars. Number one is getting faster and faster with our delivery speeds. We've seen a very clear increase in sales that you get with fast delivery. And so we're going to be pushing next day delivery and maybe even exploring the same day delivery as we get into next year. Second is going to be making our platform more flexible for merchants. So covering a wider variety of use cases that our merchants can leverage it for. That includes things like temperature control, returns, for various different verticals to use the network. Lastly, it comes down to growing the team and the network.
Talk to us about growing the team. I mean, supply chain is something I talk about day in, day out, concerns about labor, the difficulty of hiring. What are the biggest headaches for you right now?
Yeah, well, it kind of depends where you want to focus. I think if we're looking at actual warehouse and carrier capacity, the biggest way that we solve it today, and that we're unique, we don't own any of the assets. We're an asset-light network, and we basically orchestrate the different assets. And the way to build capacity is, frankly, through optionality. And so we've more than doubled the size of our warehouse network. We've more than doubled the number of carriers we work with. And with more optionality, you're going to be able to build more capacity. As it relates to growing the team, we've grown the team quite a bit over the past year. It's been really interesting as everything's been mostly remote. There you have to come down to the cultural values and really kind of focusing on creating this cohesive community with your team and with your employees.
Who are your competitors right now? Because do I know it's you delivering? Is it more, do I just have a relationship with the company that I'm buying through and you're the back end? How does your name work?
Yeah, so you would not actually know you're receiving from Deliver, but Deliver actually now is on track to power over $2.5 billion in GMV annually. So we're behind the scenes. In the end, you're going to be working with the merchant. So let's say, for example, Annie Energy is one of our brands. It was founded by Josh Richards, a popular TikToker and influencer. So if you go and you order from Annie Energy, you're going to see free 2-day or free next day delivery. And that is going to be powered by the Deliver network, meaning that inventory is going to be sitting in delivered locations. We're going to be communicating those delivery promises to you via their Shopify store. And then when you order online, we're going to figure out how to get those items to you in either 1 day or 2 days or less.
To that end, who are your competitors in that landscape? And is there enough demand as we sort of we hope, we pray, we move outside of a COVID life and start to get back into the stores?
As it relates to the competitive landscape, there are a lot of ways that items can get to you. I think the most common thing that we see are actually merchants shipping themselves. So merchants would have their own location where they use it for everything, and then they would ship it, with one carrier, and it would be 7-day delivery. You're going to have your typical 3PLs out there as well. They tend to deal with much larger brands. And then you have services like Fulfillment by Amazon or Walmart fulfillment services that are mostly geared towards helping merchants just sell on that particular channel. So it's a very diverse competitive landscape, honestly. But really, the core usually comes down to merchants shipping themselves 5 to 7 days, and you want to, our job is to convince them that by outsourcing that and partnering with us, we can essentially offer 2-day and next day delivery across the country.
We want to thank you so much for your time. Congratulations on the fundraise, and tell us how you continue to grow. Michael Kokaris, co-founder of Deliver. We thank you. Meanwhile, that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow when we're joined by Rizwana Bashir, co-founder and CEO of the online marketplace For Experiences, that's Peak. We'll also be speaking with Tableau president and CEO Mark Nelson. From New York, I'm Caroline Hyde, and this is Bloomberg.